Okay, I'll share it. Yeah, chalo, let us start Ind AS 109. See, it is not just 109, 32 as well as 107. What are those things, what each standard discuss? We'll have a look at it. Right, my dear. Yeah. So now, um, let us look into one by one. Before that, what I say, um, some classes. Yeah, this is our Pendrive classes. The CA Final Financial Reporting paper number 1. Right, total amount of fees is going to be 11,800 including GST, right, and you are going to get 1.7 views and 200 plus approximately number of hours of comprehensive discussion. This will be having 100% conceptual explanation and will be useful for your examination as well as for once you clear the examination. Yeah, when you get into a company also you will get some confidence for sure after listening to the classes. Yeah, let us continue our discussion, my dear. Yeah, see, first of all, generally, generally any standard, if you see any Ind AS, if you look at Ind AS number 2 or Ind AS number 3, any standard, if you see, any standard will be having some 5 parts. What are the 5 parts? 5 parts will be, that is objective, that is scope, and next is definitions, recognition and measurement. Okay, recognition and measurement, presentation and disclosures. Presentation and disclosures. Yeah, these are all the 5 parts. All the 5 parts will be in one standard normally. Okay. But with respect to financial instruments, it is not in one standard. The same parts only is being divided into 3 standards considering the voluminous of it. Yeah, it's a big standard, my dear. 109, this if you add 109, 32 and 107, if you try to print it out the bare standard, right, I'm very sure I have never added it up. It will be more than 350 pages, it will come. It will be more than 350 pages, it will come. Got my point? So, they don't want to put everything into one standard, they have bifurcated. Right. So what is the bifurcation? What is the bifurcation? So first one is 109. This is the crucial. Doesn't mean that other things are not crucial. 109 will be talking about the financial instruments ka recognition, basically. Recognition. When to recognize, when to record it. Recognition and measurement part is going to be covered in depth. Yeah. E part fully dealt by 109. Fully dealt by 109. So what about these two things, sir? Obviously, this will be there in every standard. Correct. Now, suppose if you are using one word in 109, you have to give the definition for that word. In the same fashion, even in 32. 32 may you will be using one word. That related definition has to be given. Yeah, scope will be same for all the 3 standards. Okay, right. Next to 32. 32 will be talking about financial instruments only, but only presentation. Yeah, presentation. What is presentation? Presentation is where to disclose. Okay, where to disclose in the sense whether the instrument is going to be a liability or whether the instrument is going to be equity, or is it supposed to be bifurcated into 2 parts? Okay, instrument is one, but we will cut into 2 parts. Right, one part should go to liability, one part should go to equity, and all that. Where to present, basically where to present, how to present, those concepts are explained under Ind AS 32. Right. And Ind AS 107, Ind AS 107 will be talking about only disclosure. This is financial instrument and exactly only disclosure standard. Disclosure. The disclosure has to be given where? Disclosure has to be given in the notes to financial statements. Disclosure has to be given in the notes to financial statements. Lot of disclosure will be there. Lot of disclosure. The standard also somewhere around 30 to 40 pages of data. So much of disclosure requirement is there as required by Ind AS 109. Okay, but the disclosure will come down little bit if you don't follow hedge accounting. If some companies following hedge accounting, because hedge accounting is an optional. What is hedge accounting and all, we'll see it later. Hedge accounting is an optional thing. If you follow, a lot of disclosures will be there. If you don't follow, little reduced amount of disclosures will be there. Okay, right. This is generally, I told you, one standard will be having these 5 parts. All 5 parts will be within the standard. But here, because it's a voluminous standard, we have divided. Correct. I mean, IASB, International Accounting Standard Board, has divided that into 3 parts. Okay, presentation is one standard, recognition and measurement is in one standard, and disclosure is in another standard. Right. Try to remember. I will explain you. Ind AS 32 may wherever Ind AS 32 comes in, there I will explain. See, this is part of Ind AS 32. If you remember in exam, fine, you write 32 specifically. Sir, I doubt, sir, whether it is 109 or 32. Na. Only simple, right now, 109 and 32 you write. If you remember, fine. If you don't remember, correct. Now, I can remember because which paragraph where I read, I remember. But you, because you have to study it together, na, it's very difficult for a student to remember exactly whether it is 32 or 109. In examination, when you are not clear, just do club and write it. At least that makes some sense. Okay, right. So the next part, you just observe, my dear. I'll be spending some time on the importance of the standard. If you see balance sheet, balance sheet में asset side what all will come? Asset side, tell me, basically PPE will come. Next, intangible assets, investment property will come. Correct, na? Next, loans and advances will come. Correct, na? Investments, yes, investment in equity shares, investment that, this, correct, na? What else will come? Yeah, current may if you go, correct, na? Yes, inventory is one. Debtors is another. Correct, na? Prepaid expenditure is another. Next, I don't know, I'm not bothering about current, non-current. So current hai to ade loans and advance will come, ade current investment. No, let's not bother about it. Okay, and what else will come? Deferred tax, yes, deferred tax asset can come. Correct, right. He said what will come, my dear? He said equity share capital, reserves and surplus. Here, loans. Correct, na? Even preference share capital also will come, no? Yeah, where to put, I'll decide that later. Loan. Next, what else will come? Provisions will come. Provision for warranty, provision for, correct, na? Provision for warranty, provision for gratuity, provision for many things will come. Taxation, right? Provision for a tax. Yeah. Next, creditors. Agree? Right. Next, outstanding liabilities. Yeah. Outstanding liabilities. Deferred tax liability. Yeah. So many things will come. Right. Observe, in accounting standard are here. Yeah. Carefully answer me. PPE ko, is there any standard? Yes, there is a standard. 16 is perfectly done. Next, intangible assets. There is a standard. That is 38. Correct, na? 38 standard deals with. IP, investment property, that is equal to 40. Loans and advance ko, so far have you learned any standard? No. Investments ko? Accounting standard 13, here nothing. Correct, na? Cash ko any standard? Cash flow statement is different, cash is different. Correct, na? Cash flow statement, separate statement. For that, Ind AS 7 is applicable. Right, inventory ko, yes, we have standard? Yes. Debtors, do you have any standard? No. Prepaid expenditure? No. Deferred tax asset, that is equal to 12. Correct. Next, equity share capital, any standard, amma? No standard. Correct, na? Next, reserves and surplus का standard है क्या? कुछ नहीं है, sir. P&A, I mean, what is that? PSC, preference share capital. Do you have any standard? No. Loans? No. Provision for warranty? Yes, 37. Provision for tax? Yes, that is 12. Current tax, deferred tax. Correct, na? This is also 12. Creditors? No. Outstanding liability? No. Correct, na? Where all you said no, na? There all you should say 109, almost. Understood the importance of it? Except one or two items. Yeah, one or not item, prepaid expenditure, it will not come. Maybe like that, one or two items, it will not come. One or two items, it will not come. Otherwise, almost everything, almost. Yes, few items, it will not come. I also know, I can't tell you because we are starting right now. Definition mein, what is financial asset? What is financial liability? We are getting in. Getting my point? Yeah. So I hope you understood what I'm trying to say. That important it is. So if you say, correct now, if you say, I don't know except 109, I know everything. That means what you know, right? Almost nothing. It's that important, the standard. That's why I told you that is the importance, my dear. Almost every item will come, correct now. There is a lot of gap. Our gap is going to be filled by 109. Done. Now, sorry, sir. This scope and all we'll see later. That's not a big issue actually. Yeah, when you learn the financial asset definition, financial liability definition, and equity definition, no, automatically a scope will be covered. Automatically it will be covered. You don't need to read it separately. Right. Then let's, as I told you, correct, na? What are the two things I gave you? First is consistency, each standard especially. Right. 7 days, 8 days, I will be completing the standard. Right, it's required. I mean, 20 plus hours, the minimum required for me to complete it. If I can't do that fast track batch or something with respect to each standard. I can do it, but you can't understand it. Okay, one. Next, consistency is important. Second thing is revision is more important. If you come any day without revising last few days ka subject, then it will bounce and later you will regret. Yeah, and not regretting. It will. I told you. I'm just giving you a caution. Correct. Now, if you take it properly, it's helpful to you. If you take it negatively, then that is lost to you. That's all. Correct. Na? Right. So daily revise it and attend. Then you will feel very comfortable. I am telling you. You will feel very comfortable and you will remember this throughout the life, because wherever you go, wherever the Ind AS company you go, without this, nothing is there. And I told you, we are starting one NBFC company. Correct. Na? What is that? Conversion related. Some 2000 crore company there, loans and advances very soon. Okay. So, and our company, what will be there? Entirely only Ind AS 109 is there. Nothing else will be there. Nothing, it means other things will be there. Those are all small, small things. Correct. Now, for that company, loans and advance will be this much. PPE will be how much? This much. Correct. Now, what will be PPE? Correct. Now, one bank is there, one place, 2 places, 3 places, bank is there. What is their property? Mostly they must have taken rent. Correct. Now, furniture, computers will be the only fixed assets. That's all. Nothing else will be there. Got it? But this is this kind of financial instrument, mortgage loan, A loan, E loan, correct? Na? So many things. Loans and advance, correct? Na? Loan, what you took, banker has taken from, we public must have deposited with them. That is nothing but loans and advance under, correct, na, for them. At the same time, what correct? No, whatever they took, I mean, we gave it to them, that is a loan to the company. What they give it to the public, that is a loans and advance. These two numbers will be huge numbers. And will they be having cash and cash equivalents a lot? Obviously a lot. Correct. They will be having derivatives. They will be having many things. Hmm? Right. So practical applicability of it is very high. Okay. Unless it is a very small dabba companies are not required much. But without requirement, there is no company. That you remember. Right. Chalo. Let's get into what is a financial instrument. We are using the word financial instrument. What do you mean by financial instrument? Done. Right along with me. I'll tell you where to stop. Yeah. Financial instrument. Financial instrument, first only we'll say financial instrument is a contract. Yes, it is a contract. Yeah, it is a contract which gives rise to, which gives rise, which gives rise to, what it gives rise to, sir? It gives rise to financial asset. Yeah, financial asset to one party. Financial asset to one party. Okay, financial asset to one party. Financial asset to one party. Next one is what? And this is and. It is giving rise to financial asset to one party. Next one is what? Financial liability or equity. Financial liability or equity to another party. To another party. The another one. Okay, financial liability or equity to another party. Fine. Yeah. Read through first. What is it saying? What is it trying to say? It is a contract. First and foremost thing it is you are supposed to look at is there a contract? Correct. Now, whenever you say contract, obviously minimum two parties will be there, no, my dear. Contract to minimum two parties will be there. Correct. Now, because of this contract, once again I am telling you, if there is no contract, then don't come to the standard. Getting my point? If there is no contract, then obviously no financial instrument. Don't come to the standard at all. Is it clear? Say example, simple example I'll tell you. Yeah, simple, just to start with. The provision for a tax. What did I say, my dear? Provision for a tax. Yeah, provision for a tax. Am I liable to other party? Yes. Who is the other party? Government, income tax department. Is there a contract between you and department? No. Correct now. So that's all. This will not come to 109. That's it. There is no contract. Are you getting my point? If there is a contract, then only it will be coming into the picture. If there is no contract, then nothing will come into the picture. Right. Suppose example, you will say provision for any provision for what is that? Some losses. Which losses? Legal case. Example. Provision for legal case. I will tell. Yeah. Legal case. You are expecting that you are going to lose the case. That's why you made a provision. Yeah, fine. As per Ind AS 37, you have to make a provision. But is it going to be? Is it a financial instrument? No. Why no? Is there a contract? No. That is my one-sided expectation. I am expecting I may lose it. That's why I am booking the provision. No, this is also not. Hope you understand. So, first thing which you need to focus is there a contract first? Yeah, sir, there is a contract. If there is a contract, then you will enter into Ind AS 109. If there is no contract, then obviously no. First and foremost, important thing. Okay. No, why am I telling? Na? I have seen this. People wrongly classify into financial asset category. In the balance sheet, financial asset, financial liability will be there. Wrongly they will classify it. Understood? Yeah, that should not happen. That should not happen. You should be classifying very carefully. Then next thing. Financial, I mean to say, what is that here? I mean to say statutory liabilities. Correct. Now, statutory liability is one word which will come in your balance sheet, like PF payable, ESI payable, TDS payable, so many payable, GST payable will be there or not? These are all not, my dear. These are all not at all 109, because this is payable because there is a law. This is a legal obligation, legal requirement, but not contractual obligation, but not contractual requirement. We understood. Those things should not come. Those things should not come. Fine. Then come to the main point. So it is a contract which gives rise to financial asset to one party. In one party books, it becomes a financial asset. In the sense, in simple explanation, if I say balance sheet of balance sheet of party 1, if I say balance sheet of party 2, okay na? For one party, it will be sitting as a financial asset. For another party, what it can be? Well, for another party, it can be financial liability or under. Or both cannot be. Okay, financial party, or it may be equity. It may be equity. It may be either financial, for another party will be regarding as a financial liability or equity. Sir, what is financial asset? I'll explain you. But before that, just a small thing. Suppose A is one party. A is one party. A sold goods to. Correct. A sold goods to B. B is another party to the contract. Yeah, sale of goods, obviously there is a contract. Correct. No? Contract with the customers. Revenue from contracts with customers in days 115 just completed. Correct. No? Yes. So in this case, A sold goods to, obviously it is on a credit basis. If it is cash basis, nothing is there. Contract closed. As on 31st March, no contract exists. I sold goods, you gave cash. There is no relation further. Get lost. Correct, na? Exactly. So here, look at my dear friend. Yeah. What is that? This is A's balance sheet. Agree? Isn't it A's balance sheet? Exactly. A's balance sheet will he be recording as a debtor? Yeah, that is nothing but B. Array B, you are supposed to pay me some X money. Yeah, what is this debtor? Debtor is a financial asset. How it is a financial asset? You have to listen to the definition of financial asset first. Okay, done. Now, what about B's balance sheet, my dear? In the B's balance sheet, what is it? Creditor. Does he need to record a creditor or not? Yes. Creditor is what? Creditor is a financial liability. Correct. Suppose I gave a loan. I gave a loan means it is a loan and advance to me. And for the other party, is it a loan liability or not? It is a loan liability. Loan liability is a financial liability. Is that contract creating financial asset in one book and financial liability in another book? Yes. Then it is a financial instrument. It is a financial instrument. Only financial instrument can create financial asset in one book, financial liability in another book. Hello, understood? Right. One more thing. Suppose A issued share capital. A issued equity shares. Equity share capital. And subscribed B. Subscribed. Correct? Now, subscribed by B. B has subscribed the share capital. Purchased the share capital. Okay. B purchased means what is the, where will he record? Investment. Correct? Now, investment in shares of A. Correct? Now, investment in equity shares of A. Whatever the amount he paid, he will record it here. And what about A? Where will he record? Equity share capital, whatever that money, and security premium balance if there is any over and above face value. Correct? Now, is there a contract or not? Yeah. There is a contract. Yeah. In this contract, what is happened? It is creating, yes, investment in other company equity shares, equity instruments is a financial asset. See, E contract is creating financial asset to B, and it is creating equity. It is creating what? Equity to A. So, is it a financial instrument? Yes, it is a financial instrument. Have you understood? Right. So, what is the definition? What we told? What is financial instrument? Financial instrument is a contract which gives rise to financial asset to one party and financial liability or equity to another party. Correct? That matter you need to remember. Important word is what? First thing, contract. If there is no contract, then there is no financial instrument. You are out of the standard. Okay? Right. Chalo. Next point. Can you take this? Make your fundamentals very strong. Then it is obviously useful to you. Got it? Right. That's what if you see any company financial statements in the very near future, even though Ind AS is not applicable to them, just look at, yeah, is it a financial asset? Is it not a financial asset? Just try to classify it after learning the subject. Okay, right. Chalo. So far what it is, I say, my dear, in a financial instrument is something, a contract which gives rise to financial asset to one party, financial liability or equity to another party. So now let us focus on what is financial asset. What is financial asset? What is financial asset? Financial asset, they have given some 4 lines of data. Five, 6 lines are given, but out of those 5, 6 lines, last one point is there that is irrelevant to India. That is irrelevant to India. That's why I will not discuss. Right. Why I will not discuss what is that also I will tell you. Okay, why it is irrelevant also I will tell you. Right. First thing what they say, cash. Cash is a financial asset. Okay, straight. Cash is a financial asset. Okay, first there is nothing much in this to explain. Correct. Cash and cash equivalents are going to be financial, not even cash equivalent. Cash is a financial asset. Right. Second, B or 2. Investment in equity instruments of other entity. Yeah, what did I say, my dear? Investment in what is that? Investment in equity instruments. Investment in equity instruments of another entity. Investment in equity instruments of another entity. Yeah. Read the sentence. What is that you understood? In plain language, can you try to answer? Equity shares of other company. Correct, na? Yeah. If you purchase Reliance company equity shares, is it financial asset or not? Yes or no? Correct. If you purchase preference share capital of Reliance company, huh? No. Sure, huh? Has he used the word equity share capital, or has he used the word equity instrument? It is not equity share capital alone. An instrument which has the qualities of equity. Okay. What did I say? Other party, if he has classified as equity, other party has classified as equity, then it is sufficient. It is an equity instrument to you. Have you understood? In the sense, yeah, here equity share capital 100% it will come. That is not wrong. 100% correct. But it can be in India. It won't be there. But I am just telling you. Say what is that? Say compulsory convertible example. Compulsory convertible debentures. Compulsory convertible debentures example. Or irredeemable preference share capital. Irredeemable preference share capital. Next, and dividend is at the discretion. Dividend at a discretion of shareholder, discretion of the company. Example. This is an instrument. Isn't it a preference share capital instrument? Yes. Okay. Right. Irredeemable. Hmm. Irredeemable means whenever the company decides, now that day they will buy back. But you people do not have right to come to my office after 20 years or 10 years. So you don't have right to come to me and say, hey, pay me my money. No, no, I get lost. Irredeemable. Whenever we will feel, we'll redeem. Not when you feel. There is no contractual time period as such. All understood? And so dividend at least you should pay na. Kabbola. Dividend is at the discretion of the company. You already signed no prospectus. Dekha nahi dekha kya? Correct na? You must have seen the prospectus. I told, mentioned very clearly. Then only you subscribed. Agreement mein very clearly I told you. Correct na? What is that subscription I told you? I mean, in that, what is that I told you? Whenever I pay to equity shareholders, I will give you preference, pakka. First, I will pay to preference shareholders, then only I will go to equity shareholders. But at the end of the year, if you come and ask me like a lender, na, get lost, I'm not liable to you. Hello, understood? Tell me, ma, in this situation, mein, what is the difference between equity share capital and this? Preference is just in the queue, you will be coming one, correct? Na? First person, you will be in the queue. But you don't have a right to come to me, na? Do you have right to collar pakad ke, pay me Ravi Kanth dividend? Who are you? Get last first. When I call you, come. I'll give you preference. Hello. What is the difference between equity share capital and this irredeemable preference share capital with discretionary dividend? What difference? Other than spelling, any difference? No difference. Both are one and the same. Na? Equity share capital people, can they come back and give the share and ask, Ray, pay me my money? You can't ask. Agree, na? Equity shareholders, do they have the right to ask for dividend? No. That means with respect to equity shareholders also, I am not liable. With respect to E kind of preference shareholders also, I am not liable. So now tell me, irredeemable preference share capital. What is irredeemable preference share capital, my dear? Isn't it equity instrument or not? It is not equity share capital. It is equity instrument. It has the qualities of characteristics of equity. It has the qualities and characteristics of equity. Are you getting my point? Instrument name is different, but it is equity only. Okay. So the other company, whoever the issuer company will be recording this irredeemable preference share capital under the equity heading, not under the liability heading. Other company, issuer will be recording it under equity heading, but not under the liability heading. Are you catching my point? Yeah. So now you, who are you? Who are you? Investor you are. Correct na? Are you investor or not? Yes. What is it? It is an you are under the asset side na na. Asset side, correct na? So E side, this is the balance sheet of the other party, second party. This is issuer is party one. If I say, I mean I am the purchaser, correct na? I am the investor. For me, investment in what? Investment in preferential capital also you can write, but investment in equity instrument. Have you understood the word carefully? You should not read it light, like just equity share capital. Equity share capital word correct, but this is huge. Any instrument which has the qualities of equity will fall here. Not just only equity. Hello, understood? Equity share capital. That is the matter. Next, third bit or C bit, whatever you want. Okay. Next, C bit, what do I say? There is a contractual, we have a contractual right. Contractual right. Yeah, we have a contractual right. Right for what? Under that sub point, A, B, or 1 point, whatever, 1, 2, 3, something you write. 2 points are there. The entity has a contractual right. Okay, right to what? Right to receive. Yeah, right to receive. What you will receive, sir? Either cash or other financial asset. Other financial asset. We have a contractual right to receive either cash or other financial asset. We have a contractual right to receive either cash or other financial asset. Any example? We have a contractual right to receive some cash or other financial asset. Example. Can't I say debtors? A simple example. If you have debtors, means do you have right to receive money from the other party? Customer say, customer has an obligation, na? Correct. So for him it is a financial liability. For me it is a financial asset. Correct, na? At the same time, can I say loans and advance, my dear? What do you say? Loans and advance is a financial asset only, na? Yes, all loans and advances will come. Next, tell me what about the deposits? Deposits given. Deposit given to many people. Correct, na? Telephone deposit also you will give. Right? Maybe franchisee deposit you will give. Deposit may be given under number of, correct, rent deposit you will give. At least rent deposit you would have seen in companies. Correct, telephone deposit and so many subscription deposits will be there. That is all financial asset. Is it a contract? Is there a contract or not? Yes, there is a contract. What is a contract? That guy has to refund me when I cut the, correct, when I come out of the contract. Exactly. Like that, many things are there here. All are going to be where you have a right to receive the cash or other financial asset. Hello, understood? What is that they said, my dear? Other financial asset. Other financial asset means what? Financial asset means, so far what is that you learnt? Cash. Next is what? That means what? You will be getting equity instruments of that company. Simple. I gave you cash. Deposit कर दिया. Suppose in case you don't pay me cash, agreement में क्या बोलेगा? You should give your equity shares to me. I will sell that equity shares to somebody. Are you getting my point? What should I get? Either cash or equity instrument of other companies. Anyhow, financial asset only, no? That's all. Financial asset should come. Next, B, within. We have a contractual right to exchange. Contractual right to exchange. Yeah. Contractual right to exchange. Sir, what do you exchange? What do you exchange? Contractual right to exchange financial assets. Financial asset. FA stands for financial asset, not fixed asset. E standard में FA is financial asset for me. Okay, na? Contractual right to exchange financial assets or financial liabilities. Financial assets or financial liability. Means what? Financial assets with, obviously, see, exchange will not happen. Financial assets are financial liability. Why will it happen? Give me your asset, I will give my loan. Okay, will you take? I am liable to HDFC Bank, I will give you, give me your asset. Are you fool? Who will give? Correct, na? One asset with another asset, one loan with another loan. That's all will happen. Aisa padna, correct na? Means what is that, my dear? Financial asset with financial asset. Obviously, financial liability with financial liability. Nobody will exchange asset and liability. ऐसा कुछ है तो program, please tell me also. Correct na? I will also participate. My liabilities I'll exchange. Right? Nobody will do. Okay, fine. So financial asset, we have a right to exchange asset with another asset. We have to exchange. Okay, we can exchange. But here what is that which is potentially favorable, which is e-exchange is potentially favorable. E-exchange is favorable to the entity, potentially favorable to the entity. ऐसा exchange किया तो what will happen? Favorable means what? Favorable means profit. That's all. Profitable. Gaining position. We are in a gaining position. Okay, we are in gaining position. We are in gaining position. Yeah. Now read the line once again. How to read the line? Please tell me. We have a contractual right. Got my point? We have a contractual right. Right to what? Exchange. Exchange what? What all will exchange? My asset with her asset, my liability with that guy's liability. I can exchange it. But e-exchange may me, my entity must be having potentially favorable to my entity. Means I exchange होने के बाद I am going to be in a good position, gaining position, profitable position. Are you getting my point? Right. One small example I'll give you. Yeah, basic example also we can give. This example I will enter into options. Have you heard options? Options, forward, future. Heard you at least? Correct, na? Right. Option is a one small that is very much required for my financial instrument. Without derivative, this chapter will become maja nahi aayega. Yes, obviously. Right. So let me explain you little bit of that. Okay. Right. First, option. Right. Listen carefully. Listen. Word catch and answer fairly. I have a game. You are interested or not? Let me know to play with me. Okay. What is this game? We'll put one task. Correct, na? Yeah, if it is heads, you won the game. I'll pay you. If it is tail, I lose the game. Are you interested to play? Yes or no? You heard correctly. I repeat once again. If it is heads, you won the game. I'll pay you. If it is tail, I lose the game. Are you interested? Yes or no? Yes. Correct, na? But what I'll tell, who is taking the risk? You or me? Correct, na? Me only. That's why entrance fees I'll collect. Freely, no. Game entrance will be there. Whether you win the game, me lose the game, entrance fees to 1 paisa nahi aayega. A non-refundable entrance fees. Before playing the game, entrance fees is must. Is that okay? That is only option. Exactly option. Whatever I taught you is option. Now listen carefully. The options are of the option is also a contract. Yeah, obviously it is a contract. Listen carefully, then you copy. Option is a contract. Okay. Yeah. Here also two parties. Contract means obviously two parties will be there. Correct, na? Two parties will be there. Yeah. E two parties ka one party name, what we will call instead of party one or party two. Me, Ravi Kanth is there, na? I started, no. I am myself we will call as a writer of the option. Writer. What's my name? Writer. And you people who are ready to play with me, correct, na? You people are called as holder of the option. Holders. Because you have the option. Have you understood this point? Yeah. What is my name? Writer. Remember first, what are you, who are you is important. Correct. Now, from then my angular, your angular, you can decide. Writer of the option, you are all holder of the option. Correct. Who will pay entrance fees? Me or you are? Holder. Holder should pay. Correct. Now, holder should pay fees. आ फीस का नेम, आ एंट्रेंस फीस का नाम व्हाट डू वी कॉल इन आवर लैंग्वेज? इट इज अ प्रीमियम. करेक्ट ना? राइट? प्रीमियम you have to pay. That is in our simple layman language में I can say it is a entrance fees. Pay entrance fees and get it. Play. If you win, take money and go. Otherwise, चुपचाप go. Correct ना? But entrance fees 1 पैसा नहीं आएगा. Are you getting my point? Right. हाँ. So again, ये options whatever we are telling ना, ये options are of two types. Two types of options. Okay, two types. One first type is what, sir? Type number one we call it as call option. What is the option? Call. Second option is called put option. Perfect. Right. What is call? See, I have to explain considering you don't know any option. That's why I am explaining. If you already know, it's okay. On very minute basic revision. That's all. Call means what? Will call. For what? Somebody selling on the road, correct? Vegetables. Right, call. Come. Why? You buy it. To buy, you will purchase. Correct now. This is obviously call. Call is to buy. Yeah, you're putting it. You're putting it means where do you put? We'll put it in the market. Correct now. Put is to sell. Put is obviously to sell. Okay. When I say call option means what? Call option means you have a buying option. Yeah, buying option means what? If you are interested, you will buy. If you are not interested, bye. Obviously. Correct now. Put to sell. Put to sell means what? You have a selling put option. Put option means what? Put option means you have a selling option. Up to you. If you want to sell, you will sell. Last minute also, I'll say, I'm sorry, I will not sell you. Okay, fine, no problem. That's because you have an option. Choice is yours. Item is yours. If you want to sell, sell. It is not mandatory. It is not correct. Now, first one point, basic point. To the holder. Holder has the choice or not? Correct. Now, you are the holder of the choice option. Holder means holder of option. A holder has a choice. He can decide this at any point of time. But writer has what? Choice? No choice. Writer has no choice. If both has choice means how come it is? Agreement cannot be there. Correct na? No choice. It is mandatory obligation to this party. Writer has an obligation. Holder has a choice. Holder has a choice. Are you getting my point so far? Right. Say example. Simple example. Okay. We'll have a Reliance company का option. Equity share capital का option. Equity shares. Reliance equity shares related option. Ravi Kanth is writer. Take me always a writer. You guys are holders. You have an option. What did I say? Option. Let me start with first call option. Call means what is the option you have? Call means which option? Call means call to buy. Buying option you have. Yeah, call option. First you, who are you? Remember that first you should don't jump to my position. Be in that position only till the end of the example. Are you getting my point? Right. Today means 1/4 example. 1/4 we entered into a call option. Buying option. Mean you are B, I am A. Correct na? B can buy a share of Reliance. Correct na? A share of Reliance company at 2,700 rupees. Correct? Right. When will he buy? Let us say on 30th 6 2022 23, no, whatever, 22 23 something, you take it. Right. 30th 6 2023 mein you can buy. Have you read the option first condition? What is the option you have got? You can buy a Reliance company share from me. Correct na? When you come, sir, I want to buy, take your 2,700. That time I cannot tell, get lost, I'm not interested. No. I'm a writer. Writer has choice, no choice. Writer has obligation. I have to sell. If you don't come, I will not force. That is different. अरे समझ में आया? So now tell me, will you come to buy on 30th 6 or not? Depends, no. Correct now. Will you come? Blindly you will close eyes and come. Nobody will come other than you if you say yes. Correct, na? Depends on the situation. Now, 30th 6. What is the market rate? Market rate. Share market mean market value of the share. Market value of the share is equal to say 2,800 rupees if I say. Yeah. Next number is equal to 2,500 rupees on this date. This is on which date, my dear? 30th 6. Last date. Now, market may, if you want to buy a share in the market, how much you should pay in the market? 800. Will you come to me or not now? Why you will come to me? Because Ravi Kanth agreed to sell at. Ravi Kanth has to sell at 2,700 only, na? Right. So isn't it a gain? Isn't it a gaining position to you or not? Right. You are in a positive 100 rupees. Now tell me, will you come to purchase a? Second situation may, if it is 2,500, will you come to buy a? No. Why? अरे सर मार्केट में 2500 को मिल रहा है तो क्यों? वाई शुड आई परचेज इट फ्रॉम यू? करेक्ट ना? एट अ हायर प्राइस 200 rupees एक्स्ट्रा मिलेगा. करेक्ट ना? व्हाट डू यू से नाउ? बाय यू विल नॉट बाय. Correct na? Obviously you will not. This will be option, your option. You have an option. You will not exercise this option. You will say buy to the agreement. Have you understood? Yeah. So right, situation may, have you won the game or not? Yes, you won the game. It is heads. Correct? Yeah. Right. situation may, have you won the game? No. But have you lost anything? No. Correct na? Your entrance fees is sunk cost na. Correct na? Cinema ticket you purchased up, entered cinema, whether you like, do not like, whether you want to come in the interval only or within half an hour only you want to come, that's not useless. You paid, will not repay you. Entrance fees is useless. Correct na? Here also same thing. I hope you understood. Yes. In 2000, have you won the game? No. But have I lost the game? Yes, indirectly. Why? Was I holding the share? Yes. Correct na? So, I mean 2000, my share worth has become reduced from 2,700 to 2,500. Is it reduction of share is there or not for me? Yes. So, I lost the game, otherwise no. What you lost? Nothing. Only entrance fees anyhow lost. First day you should say charge to P&L because it will never come back. Okay. This is tail example. This side is heads example. Have you understood? Now, come to the matter. Now to come to the matter. Why did I explain all these things? To explain this one. Correct? Right. Read the sentence once again. We have a contractual right to, you have to read first E line, then come to E line. Correct? Na? Tell me. There is a, read out. There is a contractual right to exchange financial assets or financial liabilities which are potentially favorable to you. Potentially favorable to you. Hello, understood? Right. Now, in the same example, what do I say? Option example only I will tell. Example. Yeah, you have call option. What is option you have? Call option. Yeah, call option to buy. Yeah, same example. Call option to buy. Reliance company share. Reliance company share at 2,700 rupees only I will say. Option is there till, correct na? Till you have till 30th for 2023 tak option hai. Okay, now what is my balance sheet date? Balance sheet date is 31st March 2023. You must have entered on 1/1 some other date. Yeah, middle mein, somewhere in the middle we found we have our balance sheet date. Now tell me today what is the Reliance company? Reliance company market value of share is equal to 2,800 rupees. I'll keep it. Tell me. All right. Today, are you a party to the option contract or not? Yes or no? What are you? Holder. What am I? Writer. Right. Do you have right to exchange? Yeah, right to exchange means you will give your cash. I have to give my share. Okay. Right. In this exchange, if it happens, as on today position, are you a winner or loser? Winner. Why winner? Market rate is how much? 2,800. But you will buy, your option is to buy how much? 700. So are you a winner or loser? Winner. Is it potentially favorable to you or not? Potentially favorable to you. And when you say you people have potential favorability, then isn't it potentially unfavorable to me? Then You people, holder will recognize financial asset, and me, writer, will record financial liability in my books of account. Suppose one, correct na? Here, what is it? It is potentially favorable. Yeah, potentially favorable. Favorable to one part. Potentially favorable to holder. Correct na? Potentially favorable to holder. And correct na? Next point is what, my dear? Potentially unfavorable. Correct na? Unfavorable to writer. Is it clear? Shall I go ahead? Yeah, listen. So with respect to this, say this is A. A is the writer of the option. A balance sheet, and B is the holder of option. Okay na? B is the holder of option. A records what? Writer ko liability hai na? Hello, as on today, if it gets settled, am I losing 1000 rupees or not? Am I supposed to, sorry, 100 rupees? Am I supposed to pay you 100 or not? Yeah, I'm losing. Correct. Now, losing means you have to make a provision here. You will say financial liability. It's a derivative. Okay, derivative. Okay, fine, whatever. FVTPL option, something will come. So, I will say 100 rupees. 100 rupees kaisa aa gaya? 2800 minus 2700. Same way, this guy will be recording, yes, I have a right to. Holder has a right. Winning situation. So, 100. Isn't it a gain to you or not? It's a gain to you. So that's why what do you record? Hmm. Financial asset account debit to P and L. This is FETPL always. P and L. 100. What about this guy will record? Yes, P and L account debit 100 rupees to financial liability 100 rupees. Have you understood? Subsequently, next on 30th April, what happens, that I don't know. But today, as on the date, the position has to be reflected. As on the date, position has to be reflected in the financial statements. Is that fine? Right. Suppose, example, sir, on 31st, this is situation number 1. Situation number 2. Suppose situation number 2, Reliance market value is equal to 2500. Tell me, ma, if it is 2500, what about A balance sheet and B's balance sheet? Is it potentially favorable to you? Huh? Will you purchase 2700 rupees when the market rate is equal to 2500? Nobody will come. Correct. Is it unfavorable to you? Not unfavorable also. Is it obligated to you? No obligation. Mandatorily you have to come and buy. No, that means what is it? Is it asset to you or liability to you? Nothing. It is not. It is neither asset. It is neither liability. Whatever you paid is premium. Correct na? To purchase the option. Adella already charged to P and L. Sunk. Immediately should be charged to P and L, because that is, I told you, that is cinema ticket. You like cinema, do not like cinema, that is nonsense. That I don't care. Over it is. So that is already charged to P and L. That will not come to balance sheet. Got it? Right. Come to E side. Right. What about A? Am I liable to you? You come, no, I'll give you. But you will not come only, na? Because you have an option. So obviously it is neither liability to me or not asset to me. That's all. So, right, when the market in the given circumstance, when the market rate is 2500, nobody will record any journal entry, nobody will record asset, nobody will record liability. But one thing you should remember, other party is recording asset means liability will come into the second party, because financial instruments creates financial asset in one party, financial liability or equity to the other party. It is automatic. It is not like only one side I will record, whether he records or not. No, he also must be recording. Otherwise, you are in the right, you are in a wrong standard. Have you understood? Right. This is about financial asset ka definition. Okay, I'll give some time to copy. Right. One more sentence is there. Under this sentence, what will happen? Fourth sentence. First one is cash. Second one is investment in equity instruments. And the third one is what? You have a contractual right to get cash or other financial asset. Next, contractual right to exchange financial assets or financial liabilities which are potentially favorable to the entity. Correct? Right. That is D bit. I mean, fourth bit is there. What is the fourth bit? Where You will be getting your own shares. क्या क्या बोला? You will be getting your own shares. But my dear, in India, it is not permitted to hold your own shares, no. Arey, will you have equity share capital decide, investment decide? Our concept is not permitted by India at all. But internationally permitted as are, yes, internationally permitted. Those shares are called treasury shares. That also will explain, little bit I'll explain, but that is irrelevant to country. Okay, wherein you have right to receive your own shares. You can't receive your own shares. Fine. That's why I'm just skipping that small point. Fine. Right. So can you please make note of this? From where you need to write? Have you written this part? Next. Yes. Chalo, let us start with financial liability. Yeah. Financial liability. FL. FL has only 2 points, my dear. Only 2 points, but are two also big points. Okay, right. See, just to try to understand, financial asset में cash I kept. Cash cannot be liability. So option out. 2. Equity investment in other entity. Equity investment cannot be liability, na? So that also ruled out. No. But the third bit, what was the third bit under financial asset? Contractual right to, correct na, pay cash or other asset. I mean, receive the cash or other asset, or contractual right to exchange. Correct. Now, financial assets are financial liabilities which are potentially favorable to the entity and the correct. Either line we can tell financial liability also. Yes or no? Yeah. How? Contractual obligation to. Can I use the word? Yes. Let us start. First word. Contractual obligation. Contractual obligation. Contractual obligation to. Yeah. Contractual obligation to A. What do you say? Obligation to settle, pay or settle. Settle. Yeah. Settle by paying. Settlement can happen by paying what? By giving, by paying, whatever, by giving cash or other financial asset. You have an obligation to settle. You are liable to pay. Creditors are my example. Simple example. Example creditors. Hmm. Creditors, how do you settle? Cash you give, close the creditors. Or you couldn't give anything. Correct na. What can you give? Can you give some other financial asset? Means what? You purchase Reliance company shares. Other Infosys company share you have in hand. Can you give this and close it off? Hello? Hey, you are a creditor. I am the party. Okay, na? I am liable to you. Otherwise, you are okay. I am only liable to you. I am a creditor to you. Fine. I am liable to you, na? How should I pay? Cash de do. Then you will say, fine, sir. Or in my balance sheet, I have some Infosys company shares also. I have so much investments. Instead of cash, I want to give you investments of other company. Is it okay to you? It is understanding only, na? It is not like force ne kuch nahi. As per the understanding, I don't have money pa, sorry, I'll give you shares. Shares if you want to sell in the market, sell karo, get the cash. Hello, understood? Is it okay, not okay? 100% okay. What is your problem? Agree? Correct. Or I have a BR, bills receivable is with me. क्या है? Correct. Bills receivable means some party has to pay me, na? I will give it to you. You please go and collect it from that guy. Are you getting my point? I was liable to you. Cash I can give, BR I can give, I can give investment in some other company, I can give it, I can close it. Is it fine or not? My customer is there, my customer, not you. You are my creditor. My customer say BR likhti already. He wrote a BR to me and he gave it to me. He said I will pay you. Yeah, he will pay me after 1 month. I am also liable to pay you after 1 month. Hey, BR le lo yaar. Please you only go. He is next to your door only, na. That you please go and collect it instead of me paying. Can I do that? You can do. Anyway, you can close it. Remember, what you are promising to pay must be other financial asset. Correct? If you say, I will give my building here, I will give my building and close the liability. I can close it. Yes or no? Am I liable to you? Yes. Agreement is that I will give a building and close it, not cash, not other financial asset. If the agreement is like this, then it is not a financial liability. That's it. Because sentence क्या है बोलो? Sentence क्या बोला? You should settle it by paying cash or other financial asset देना, not any asset. अरे understood? It is only financial asset, not any other asset. Any other asset, you have an agreement like any other asset can be given. Any other asset. Nope, any other asset if you can give, you can give, but we will not consider it as a financial liability. I hope you understood. Simple example. I will clear your debt. I am liable to you. I can't pay you cash. I will take my building and go. And then it is not a financial liability. Hello, understood? Say in the same word. Example. Example. Advance received from customer. Advance received from customer. Tell me, is it a financial liability or not? Advance received from customer is a liability. Normal liability. Advance received from customer said, right. Now tell me, is it a financial liability? Yes or no? Right. Are you liable to give him cash? Are you liable to pay him cash? Agreement is what? You correct na? Received from customer. Customer को क्या दे ना? Either goods or services. Agree or not? Yeah, goods or services you will give. Will you give cash? No, no. Agreement में कुछ नहीं बोला. Why you paid me money to get cash? And bank आना. Correct na? Is a bank like you deposit and withdraw. That is not the goal, na? Agreement is what? Supply the goods. If you are not able to supply, then you give me my money back. That is a different situation. For initial agreement is you gave me money for giving the goods back. Correct. See now, advance received from customer. Obviously, what are you going to supply? Goods or services. So no, it is not a financial liability because our obligation is not with respect. Our obligation is not to give the cash or other financial asset. Goods you will give. Goods is not a financial asset. Inventory is a financial asset. Hey, बोलो इधर इन्वेंट्री डेफिनेशन आ जाओ. हाँ, definition. Inventory is cash. No. Inventory is investment in equity. No. Investment is right to receive. What right to receive? You have not sold only. Inventory stock in hand. Correct ना? You have stock in hand. Your balance sheet में है. मेरे balance sheet में liability होता क्या? When you sell it, then it will become a debtor to you. Then it will become creditor for me. Till that date, no. Inventory is not a financial asset. Correct na? So what I supply, if it is inventory, then obviously it is not financial liability. Yes, please. Question. Interest payable. Correct na? Interest payable. Interest payable is what? How do you settle the interest payable? Agreement you should tell me. Correct na? Before giving me the contract, I cannot answer your question. So you have to answer my questions. What is the question? Interest payable. Interest, how do you pay? You don't be paying means there is no problem in it. There is no contract first of all. If you say suppose interest payable obviously you will be paying it in cash. Then interest payable is also financial liability. Got it? Yeah. See, that's why I told now this is not as per you and me thinking. This is as per the agreement you have to see. Contract में क्या लिखा? What is there in the contract? Accordingly only we can decide. Shall we? Right. So next B point. Next one more example here only. Provision for warranty. Tell me here. Provision for warranty. Provision for warranty. Is it a financial liability? Na? Answer me. Yes or no? No. What is a provision is a liability. Agreed. I know. But how do you settle this liability? By servicing. Correct. Na? How do you settle it? Settle by service. Correct. Na? Or replace the product. Maximum replace the product or I'll serve you. But I am not liable to pay you cash. Or I am not liable to give you other financial asset of my company. So is it a financial liability? No, my dear. It is just a liability. It is not a financial liability. Agree? Right. Next. One more thing I'll put it here. Okay. Provision for gratuity. This is another example. Okay, na? This is also one example. Provision for gratuity. Provision for gratuity. Yes or no? Yes. How do you settle it? By paying cash only. Employees को क्या देता? Cash only will give. Hello, correct? Is there a contract or not? Actually, no contract. Array, that is as per the Gratuity Act. Legal obligation. It is not a contractual obligation. One. First thing. It is not. There is no. It is not contractual. It is legal. It is as per the law. Gratuity Act. Next thing. Okay. Yeah. Next thing. It is scoped out. Scoped out. Scoped out of Ind AS 105, 109. Why, sir? Means it is scoped in Ind AS 0 missing 119. Employee benefits it will be included. It is scoped out here, scoped in there. It is not a contractual obligation. Correct. Now, when do you enter into a contract that I will pay you gratuity? We will pay gratuity because it is as per the law. Correct. Now, one more example I'll say. Anyhow, just started. Na? Yeah. Provision for something. Okay. Provision for some XX and I'll keep it. XX is what you know. Otherwise, I'll say provision for bonus. What do I say? Provision for bonus. Bonus to employees. Bonus to employees who are not covered by bonus act. क्या बोला? Not covered by bonus act. Not covered by bonus act. Bonus act में who is not covered? If your salary is above 21,000 rupees, na salary is above 21,000, you are out of bonus act. Up to 21,000 bonus act is applicable. Minimum 8.33%, maximum 20%, something. There is a bonus act separately that we don't get in obviously. Hello, understood? Yeah. Suppose you are getting a salary of 50,000 rupees. My company is, you are not within the scope of bonus act. Hello, understood? But company is making a provision. Company is making a provision. Why you are making a provision? Why you are making a provision? This is called constructive obligation. What is this object? Constructive obligation. क्या बोला है ना? Constructive obligation. Constructive obligation means because of my practice, I am paying every year, so I am recording even in the current year also. Because of my practice, customs, I am doing all these things. Hello, understood? Now tell me here, what do you do? Is it a financial liability or not? Yes, no. Right? Financial liability. Yeah, it's a cross karna. Why cross? There is no contract, amma. This is one-sided. I am good guy. Correct, na? Suppose if I say, get lost, I will not pay you bonus. Can you go to court? Can you enforce this? How can you enforce? Where is the law? Where is the contract? When did I sign a contract paper, piece of paper? I am a good guy. I paid last year. I will pay current year. It's my wish and will. If I say no, you don't have a right to go to court also. You can go to court, but what will happen? You will come back. You will not win anything. Understood? Right. It is not contractual. It is not contractual. First thing. That is what. That's what if you go to a company now, okay, what are you supposed to do? First, every balance sheet item को try looking at any audit if you do now onwards. एक बार balance sheet assets liability देखे, yeah, will this come under financial liability? Yeah, financial asset. Like that, if you try to classify for 1-2 times, if you do it, the definition will sit in your mind for longer time. Only bookish purpose or only FR book when I open that time switch on, otherwise switch off. That kind of concept will not work. You will never be good at this subject. That is for sure. Correct, na? You have to try, learn. Correct, na? You don't understand. Search. Correct, na? Think, discuss. Then sits in mind perfectly. Got it? Done. So first bit A bit, first to me A bit is over. Have you noted all these examples also? Okay, perfect. B. What is the B bit? Again, same, just reversal of the earlier financial asset. Financial asset means what is that we told? Contractual right to exchange financial assets or financial liability, bolo, which are potentially favorable to the entity. This is the word for financial asset. Now, financial liability means what should I do? Ulta exactly. Now, contractual obligation to, I already wrote on the heading. Correct. Contractual liability to exchange. Yes, I am obligated to exchange. What you will exchange? Financial assets or financial liabilities. Correct, now, which are potentially unfavorable, which are potentially unfavorable to the entity, which are potentially unfavorable to the entity. That's the point. Which are potentially unfavorable to the entity. Next. Fine. That's it. This is A point. Now, I mean first point. First point हो गया. First point में A B over. Now second point. Yeah, if potentially unfavorable means I already taught you just now. Option situation में you are writing a financial asset means obviously I must be writing, I'm a writer of the option. I will be writing financial liability. Separately example not required. Correct. Now, the example I taught from both the angles. I cleared it in the first shot itself. Correct. Done. Now second bit is crucial. Yeah, we can close it just like that also, but if you understand it, one shot में some 3-4 pages data can get over and you will never get the doubt also, right? This is big lines. I will look at the material here. I'll ask you to copy also. First I'll ask you to read it carefully, then we will do it. Okay, right. Listen, one small what is that? Information. Yeah, all these classes are available in Pendrive and Google Drive. Yes, so that you can buy it. You can contact Yashas Academy, Jayanagara branch, and entire discussion will be happening in the same speed and correct. Yes, almost every points are going to be discussed, which are important for exam, which are important for your future career. Yeah, if you are interested, please contact Yashas Academy. Chalo, come to the matter. Yes, B point. Yeah, see, look at this point, my dear. B. A contract that will or may be settled in the entity's own equity instrument. I'll dictate it in simple lines, but first listen carefully. So, no. Writing I'll dictate. From here only I'll dictate, obviously. What is that sentence, Nana? Word by word, padna. Feel like law. Law reading. Careful reading. Just read it carefully. A contract. Yes, obviously it should be a contract. That will. Will means what? Pakka. Will means pakka. It has to. Correct na? Or. Maybe. Maybe means optional. Maybe, may not be. Correct na? One is pakka, you have to settle it. Or second option is what? Choice. Maybe settled in. Settlement means I have to give. I have to close it. How am I closing? My own equity shares I am going to give you. I have an obligation to settle, but the obligation settlement may what will happen? I will give my shares and close the transaction. Can I do like that? You gave me loan to me. How do I pay you? First way is cash. If I give cash, you are falling under the above one. Hello, above one means you have a contractual obligation to settle by giving cash or other financial asset. One way. Correct. It is an understanding between you and me. Sir, if you can't give me cash, give me your company shares also fine, sir. Correct. Na? If I give shares, what will happen? If you want money, you sell the shares, no, in the market. Correct. Na? Say my company is listed company, yeah. Listed company hai to, what is there? Correct. Na? Any spot you can sell. You can hold it for few more days. If you feel that market value goes up, hold it for some time and at later point of time sell it off. कुछ तो कुछ कर सकता ना. Fine. So settlement will be or may be happening by giving the company's equity shares. Equity shares, not equity share capital alone. What word dekho? Equity instruments. See the beautiful and broad word they will use. They are never tell equity share capital. How are you settling it? By giving a equity instrument. I told you irredeemable preference share capital also is an equity instrument. If you don't read it carefully here, I can confuse you by putting the irredeemable preference share capital. Got it? Right. And is right. Now first line ka again read per once again. A contract bolo, that will or may be settled by giving our own equity instrument. Our own, my company, not other company shares. My company is Excel Limited. If I give Reliance company shares are in my hand. If I give that, that is other financial asset I am giving you. But no, here in this example, what am I giving? To settle the liability, I am issuing a share, fresh share, I am issuing it to you. All understood? No, our own share. Own share means own share, not another group entity. Group entity share is again other financial asset. Okay, here our own. Own is own. That's all. There is no replacement to this word. My company shares only, I will give it to you. Hello, clear? Right, come. And is. Not stopped there. Yeah, what all the places it will come, my dear? Tell me example. ESOP can come. Correct? ESOP mein what will happen? Will you give shares only? Are you liable to employees if they satisfy the condition or not? Yes. But ESOP is scoped out actually. Because it is dealt by 102, it is scoped out by the standard specifically. If you go to scope paragraph, you will find that 102. ESOPs are not covered by 109 because it is discussed separately by 102. Understood? Right. Many things will come like that. Convertible debenture, can it come? Yes or no? Convertible debenture means what will happen? It may be converted because option may be with you guys holders. Last day of the say 3 years convertible debenture. At the end of the third year, what do you say? Sir, equity shares de do sir. You can ask. Or your shares I don't want sir, cash de do sir. Which is profitable to you on the last day, that you will choose it. Hello, correct? Right. So convertible debentures, convertible preference share capital, like that list will come. Right now word. It is a non-derivative first word. First line mein what do you understand? Settlement will be happening by issuing our own shares. And our instrument should be a non-derivative instrument. What is non-derivative instrument? Non-derivative instrument means a plain instrument like a debtor, creditor, or loan. Just simple loan. Hello, understood? Derivative means what first? What is derivative? Any idea? Any idea? What is derivative? Simple words I'll tell you. There are 3 conditions for this. There is a definition is given by the standard, which we will read it today itself after some time. But for the time being, what is a derivative? Derivative is the value of which depends on some other thing. Okay, what did I say? Value of which is based on based on underlying asset. Underlying asset. Some underlying asset. Okay. Value of this is it will not have its own value. The value will be going up and down based on something else. Reflection it will come here. Okay. That is called derivative. Right. If it is, what is derivatives, sir? Simple examples I'll say. Simple examples are generally options are derivatives. Forwards are derivatives. Okay, na forwards. What about next futures, swap contracts? All those things are derivatives. These are all derivatives. Okay, sir, non-derivative. What is non-derivative instrument? Non-derivative means what? Loans are. Loan. Loan is a non-derivative. Plain loan, yeah. Plain loan means, yeah, you gave me 1 lakh rupees. I am liable to pay you 1 lakh rupees back with interest. Correct na? Market में something changing. Will I give more? I will not give more. Nothing I will give. 1 lakh is promised. 1 lakh only I will give you. Are you getting my point? Right. That is a plain debt. Correct na? Loan, creditors. These things are called non-derivative instrument. Simple. For the time being, sufficient. Right. Detailed discussion will happen. Now come to the matter. You are coming to the sentence again. What is that? It is a non-derivative instrument. Forget about this word. Non-derivative means a loan करके assumption ले लो. Right. For which entity is or maybe. Is or maybe is nothing but same thing. Will or maybe, is or maybe same. Okay na? May be obliged to deliver a variable number of own equity instrument. The point to be caught is variable number of own equity instruments. Read the line once again. What is that you understood? I have to pay you equity shares. Equity shares I have to pay you. Correct na? Right. Even if I am supposed to pay you equity share, but how many shares I will give you? Variable. Variable in the sense, will it be decided today? No. When do you decide it? Last date of that, a future date. Last date of contract may will decide. Hello, समझ में आया? Right. Now look at. Say example. Simple example to this line. Try to understand. Yeah, I have given a loan. Loan. How much money, sir? Say example 10 lakh rupees loan. Right. Okay. Now say example you have, I may be example say I have given an option to you. Option sometime maybe with the company also. Right. Option is with the holder. Means he loan is convertible. क्या बोला? Convertible. Convertible means holder has an option or not? Yeah. Or he loan is for how many years, sir? 3 years period loan. Last day at the end of the at Y3. At Y3. Yeah. What the holder can tell what? The holder in the sense you are a lender. You are a lender. You are a lender. What can you say? Last minute you can say, sir, you give me cash. Last minute you can say equity shares of your company you give. That is also okay for me. You can tell. Now, if you give cash anyhow financial liability, that is not a discussion. Correct? Now, if equity shares also, how many equity shares? Now, question should come, how many shares? You getting my point? How many shares? Fixed number of shares or variable number of shares? Variable number of shares. Now, what do I say? Sir, equity shares I will give you, sir. At what rate? One share is equal to what rate? We'll decide on that rate market value. Okay, na? Y0 market value of my company share is equal to 100 rupees. Correct na? Y3 market value of my share may be 140 rupees. So how many number of shares? Number of shares to be issued. Number of shares to be issued. कितना shares issue करेगा रे in the future? In the future 10 lakh तो ये number तो fixed. 10 lakh worth of shares on because you give 10 lakh na. 10 lakh worth of shares I will give divided by X. X is equal to 140 will come. God knows 140 will be correct. 140 na 145 or 240 na. How do I know after 3 years? Please समझ में आया? On the date of issue, I don't know how many shares will be issued at the time of settlement. That is the line. Hello, understood? Here I am not fixing what? Number of shares. Now listen in this question. Try to understand what is the consideration. Consideration is equal to how much? Number of shares. Now situation number 1. In my example, amount 10 lakh rupees fixed. Hello, is it fixed or not? Fixed. Number of shares fixed or variable? Variable. Yeah, if it is variable, now is it a financial liability? We are reading the financial liability definition. So amount is fixed, number of shares is variable, then financial liability. That is the outcome of the line. वे समझ में आ रहा है? Exactly. Now come to the word again. Here, पढ़ो once again पढ़ो. Don't be. हाँ, क्या बोला? It is a non-derivative. Yeah, plain loan actually non-derivative. But I have given an option to you. What is the option given? That you can settle it in with my own equity instruments. I can settle it to you. Correct, na? But how many shares I will give you? Variable number of shares I will give, not fixed number of shares. Okay, 10 lakh ko 10,000 shares I will give. Then it is not liability. Here it is. What is this here? Variable number of shares to be given. Agreed? Right. Come to the next point. This is over. Yeah. Here word. What is the word used? Nana? R anda. R anda. R. Correct na? That is very careful. E language R means this is separate. This is separate. Now come to the next word. What is this instrument? It is a derivative instrument. It may be an option. Share warrant. Example. Share warrant you can tell. Share options we can tell. Forwards you can tell. Correct na? Many forward futures and etc will come. Yeah. First the instrument. What are you talking? It is a derivative instrument. Read the line. It will be settled or may be settled. For. देखो other than. E word is crucial. That's why I bolded. Other than what? Other than exchange of fixed amount of cash. Other than fixed means what? If I cut this, can I write here variable only directly? Other than cut kiya to correct. Now read the line. A derivative instrument which will be settled by paying the, by giving what? By receiving. Correct na? By receiving what? By exchange of. Exchange means I will give mine shares. I already told. Means what do I get? Variable amount of cash. Hello, understood? Company giving shares or getting shares? Read sentence. Getting shares. You are buying your own shares. Read the line. That's why I asked the question again. If you are purchasing shares, it is a financial asset, no? Correct. Na? You are under which discussion? Then liability suddenly jump to financial asset. Why? Now the point is what? Read it. You have to read continuation to E line only, no? Read. There is a contract. Will be settled. I will be settling the contract by giving our own equity instrument. Means are you issuing equity shares or not? Yeah, you are issuing equity shares for a variable amount. Hello, what did I say? For a variable amount. Can I say like other than no fixed I don't want to do. Other than I want to cut, fixed I want to cut. Now it will become plain line. I may or I will settle the liability by issuing our own equity instrument. It may be derivative, forget. Correct now, by exchanging variable amount of cash. Can I read like this? What do I get as a consideration for my issue shares? Variable cash. Cash. Remember, not other things. Cash, but variable cash should come. Hello, correct? Now, come to the lines here. Think second point. Now, consideration is variable, fixed, variable. Consideration is variable. Yeah, assume number of shares are fixed. Not a problem. Yeah, if you say assume number of shares is equal to fixed. Now it is, isn't it a financial liability? Hello. sentence को bring it to our own simple language का लेके आओ. Means what do you get exactly? How much amount you will get? Is it 10 lakh? No, it may vary. I told you, I promised you. Arey, I will give you shares. How many shares you will give? 20,000 shares I will give you. Sorry, very good. At what rate you will give? Which date I will give? Na? That date I will tell you. Correct na? Today what is the rate? Today market value 2000 sir. Correct. After 3 years na settlement will happen, not today, no. That date how much is the rate? No. Our rate prakara I will give you. Say that date 4,000 rupees share. 20,000 into 4,000 amount you pay me, I will give you 20,000 shares. How much consideration will I get? That will be fluctuating. That will be fluctuating based on share value fluctuation. Share value goes up, I will get more money. Share value falls down, I will get less money. But giving the 20,000 shares is pakka. 20,000 shares pakka. But amount kitna milega, God knows. That will you have to wait till the future date. Have you understood? Seriously went inside. That's all. That's why I said, how much do you get? I don't know. Today though I don't know. Issue date mein kuch malum nahi. I'll get to know only at the end. But do you know at least how many shares are you supposed to issue? Idu gottu. Yes, I know. Got it? That's all. Come down. Sorry, please. Equity shares, but for variable amount of cash. If I confirm the price, if number of shares are confirmed, amount is confirmed, then it will become equity. You are not it will not fall under the liability definition. That I'll close it in few minutes. Just wait. Come. E point you read, my dear. Next. Read carefully. Here also other than fixed. If fixed cut karna na. The minute you cut other than, fixed should be reduced or not? Yeah, other than means what? Variable. So how to read the line? Tell me. A contract. Right, this is standard language. I can't change it. I can simplify when dictating the note. Correct na? I have to keep as it is. In the near future, you have to read the standards. No. If some client asks you, or you are supposed to, once you are qualified, you have to argue with the auditor. You have to show these wordings. See, these words read like this. Then your standpoint will be super. How to read the sentence, Nana? There is a contract that will are settled by my issuing my own equity instruments. I have to issue my shares. Correct, na? When I issue my shares, will I get something or not? Yes. What do I get? What do I get? Another financial asset. Which asset I will get? Not cash. Other financial asset. Again, what do you get? Not building. Array, shares issued. My shares issued for building. Is it a financial liability? Yes, no. Why no? Only financial asset should come in. A building is not a financial asset. Agree or not? Building is not a financial asset. Other financial assets should come. But how much worth of other financial asset will come? Sorry, this is 1 second. Another financial asset you are getting it, but for a fixed number of entities own equity shares. Other than fixed means variable number of shares are you going to issue? Correct? Now I repeat once again, full line, but carefully read it. Carefully read it. We are going to settle the obligation by giving equity shares. Okay, here amount may be, what is the financial asset I will get? That may be fixed. Correct. But how many shares I will issue? Variable number of shares you are going to issue. Are you getting my point? Is there a difference between above bullet point and below bullet point? What is above bullet point? Variable amount of cash will give. Correct na? Below point is what? Variable number of equity shares I am going to give you. Something going inside. Now come to the matter here. Now again, shall I put it in this table? Third possibility. Tell me which is variable you are writing? Number of shares, amount of asset. This is variable. Correct na? Assume condition also. This is also variable. The variable is the fixed and already decided. No. What do you give? Another financial asset I will give. You should give me your own shares. Yeah. Simple example I'll tell you. Example. You are the company. This is the reporting entity. Okay. This is other party. Other party ka financial asset. Right. Simple example. He has what does he has? Some Reliance company ka shares he has. Okay. He purchased. He is not Reliance company. It's some this is Y Limited. Are you there? Still? Now who you are in which company? Who are you? X Limited, Y Limited, Reliance company, Infosys company, X Limited. That is reporting entity. X Limited you are. You are entering into a contract with the other party. Okay. What is that? Other party. Who is other party? Y Limited. Y Limited has investments. Which investment it has? Correct. Reliance is in investment in Reliance share. Is it a financial asset to other party? Yes or no? Correct. Now, what is that contract we entered? अरे तू a Reliance company का shares को मुझे दे दो यार. I will give my company shares to you. I will issue my company shares. Really नहीं देना, but I will not give you cash also. क्या क्या बोला? I will not give you cash. I will give you my shares. Sorry sir, how many shares you will give? Tell me, you are X company CFO. Tell me, what do you give? I will not give only, sir. The transaction I did not understand, so I don't do only. Tell. What do you tell? What is your answer? 1,000 shares of Reliance are with the other party. You are the CFO of X Limited. NIM share also assume this is also some market made trading. Exchange will happen after 1 year. How many shares would you promise to give? Some lucky number will tell. Not number of shares. Now what do you say? Based on the market value. Market value of whom? Only Reliance share. What about your company share? Correct na? Simple ka? Correct na? After 1 year, example, not today, after 1 year, correct na? After 1 year, Reliance company shares 1,000 shares are there. Example, 1,000 shares into that day market value of the share. Hello, correct? 3,000 rupees shares, example, assumption. So, 30 lakh rupees paisa will come divided by, are you supposed to give your company shares or not? How many shares do you give? At face value? Why will you give face value? Your company also has some market value or not? Per share, your company share is equal to only 2,000 rupees market value. Then number of shares will come here. So how many number of shares? How many number of shares are you issuing? This is variable number only, na? Right. What are you going to get? Variable, because E2 3,000 rupees of Reliance company share also variable only. Both are variable. अरे समझ में आ रहा है? Correct, exactly. So that is what I told you here on the top, my dear. If this is also variable, this is also variable, then it is a financial liability. Now, what is left here after doing all this? Only fourth point is left. No. What is fourth point? If this is fixed, this is also fixed. Then it is a equity. Then it is not a financial liability. What is not financial liability is an equity. Adapa meaning of 4 lines. 4 lines ka meaning E 4 lines. So simplified, no, they have.
but it's very difficult to tell. Can you use any other better language? It all leads to dilution, dangerous actually. Correct. Now I have to express in such a language. It's anyhow it is difficult to understand, but you can't dilute this also at the same time. If you change any word, it's going to be dangerous. Now look at the. I'll dictate. You will copy everything. You'll do it. Now look at this line. Suppose rights shares are issued to the public. Tell me, rights issued. Hmm. Rights issue में what will happen, Anna? Tell me. Rights issue. Rights issue means rights will be given to whom? Existing shareholders. Do I tell very clearly? Today only will I tell, अरे you are holding 100 shares number 1:2 ratio में rights can be exercised. Means आपका पास 100 shares है. You can purchase another 50 shares. 1:2 ना. 1 share for 2 held. 50 shares means number of shares fixed on fixed variable fixed. In the rights issue time, I tell very clearly, you have to pay per share itna paisa pay karna. Do I tell? Will not tell. It may be cheaper than the market rate, but it is fixed. Now consideration fixed. Number of shares fixed. Now e transaction is a financial liability na equity na equity. Both are fixed. Equity close. Understood? Even share warrant also. क्या बोला? Share warrant means what? You will purchase a warrant from me today, but at later of time I will issue the share to you. A warrant will be settled by issuing my company equity shares. Am I obligated to settle it? Yes. By how do I settle? By giving cash? No, not by cash. I have to give my own equity shares. Right. Tell me, one warrant to will get what? One share. When I am issuing the warrant, have I already collected some X money? Is consideration fixed? Next, how many shares I will give? Variable? कुछ नहीं variable. One warrant को one share, one warrant को whatever. I must have already told in the day one itself. Consideration is fixed. Number of shares also fixed. Now what is this instrument called? Equity instrument. Now read the para. For this rights shares, options for the shares. Okay, money if it is fixed, warrants. Yeah, acquire for a fixed number of instrument for a fixed amount are considered as equity instrument. Hello, understood? Yeah, it may be derivative, not derivative. It is obviously given to existing owners. Maybe derivative or non-derivative does not matter. Forget about those derivative, non-derivative word. Okay, but look at the consideration and this, then automatically you will be able to answer. You have to be very careful. What is the amount? Consideration क्या है? Number of shares क्या है? Both are fixed equity. Under all other options, liability. That's it. कुछ समझ में आया? Right. Yeah, we'll see these words. If it is embedded, converted option, so many things are there which will be discussed in the near future. Okay, not today, tomorrow, day after it will be discussed. Chalo. First you write, I will be dictating few lines. Yeah, a contract. I may be repeating mostly same, but yes, slight difference will be there. Don't expect. I can make it very simple. Nobody can make it simple. If somebody makes it simple, means he's killing you. Because no word can be replaced with another word. Very dangerous. Okay, right. So it's a contract that will or may be settled in entities' own equity instruments and is A. A non-derivative instrument and is a non-derivative instrument where entity should issue variable number of equity shares, variable number of equity instruments, variable number of equity instruments, or B, next point, or you write it and bracket something, put it in background of or, not and. Okay, yes, second bit, I mean sub bit. Yeah, a derivative instrument where the entity receives variable amount of cash, variable amount of cash, bracket में other than fixed, variable amount of cash, bracket में other than fixed. Done, right. Or receiving another financial asset, or receiving another financial asset by issuing variable number of own shares, own equity shares, own equity instruments, you write own equity instruments, variable number of own equity instruments. Okay, right. I tried to simplify to some extent, not a greater extent, but that is relevant. Yeah, which one do you want to take it? The B point, you took it already. Would you like to take this? Derivative means value of which is based on underlying asset. Once some line, you write it. Better keep it in the notebook. See the explanation kind something. Later you have to write this table, small table of 4. Okay, na? Conclusion, that is important. That is a blind rule to remember. Actually, language correctly understand no one time correctly. Na? You can classify the things just like that. Afterwards, now you see the concept capsules or ICA questions, whichever you want to see. You will feel like fat. If you remember correctly, this is going to be easy. If you don't remember, this is going to be difficult. It's not done. Further discussion will be there. Then one perfect picture of equity after explanation. Na? Financial instrument is a contract which gives rise to financial asset in another one party book, financial liability or equity in another party book. Financial asset definition over, financial liability definition over, then equity definition also over. Then auto equity is nothing but other than liability, I can close it. Okay, right. But small point is a discussion. Right. Are you through with this so far? Yeah, you write this table perfectly. So noted, my dear? Yeah, this is the matter. Now, equity. Equity, nothing great actually. Equity ka two kinds of definition will tell. Two definitions. Yeah, both are easy only. The discussion will not be great extent. Okay. Two definition. One is direct definition. I will say. What is equity? Direct definition is residuary interest in assets and liabilities. Karke I will tell. What did I say? Residuary interest. Residuary interest in assets. This is day one what I taught, if you remember. Residuary interest in assets after deducting liabilities. After deducting liabilities. Residuary. Residuary means leftover or remaining. Yeah, it is leftover or remaining. Yeah, means equity people are those who is ready to take what is there afterwards. Correct, na? Right. Next. Second point is what? Second point is simple indirect definition other than financial liability. That's all. If it is not a liability, then obviously it is a equity. For this, what the standard has given, na? Upar wala you read, no? Yeah, he removed other than. Other than, I mean, above sentence equity settlement may, wherever variable is there, he made it fixed. Something like that. End of the day, it will come fixed hai to, then only it is going to be equity like that. Exactly ulta definition is given that you don't need to remember. Financial liability correctly if you remember, na, a modification automatically you can do it and you can get it. Is it clear? Right. Next. Next. Listen carefully. One more small bit is there, then I'll take you to the question and answers. Obviously, we'll look into the question and answer after learning the concept. Mandatory, required. Listen carefully. If you right, first one basic thing, do you remember in financial management, CA inter mein if you have learnt or CA SFM mein, obviously you will learn it. Right. One small basic point. What is the basic point? Present value calculation, you know, obviously. All of you know it. Present value of perpetual cash flows, do you know? Perpetual cash flows. What is the formula? Huh? Present value of perpetual means continued. Correct, na? It's not, there is no end for it. Formula please, by mistake, by chance, do you remember? Interest divided by KD. Okay. Cash flows by interest. Is that okay? Yeah, correct, but that is not the right way to say. Y1 cash flows. Sorry, Y not Y0. Y1 cash flows. What is this? Yeah, Y1 cash flows divided by COC you should tell. KD word if you use, that is applicable only for debt. It may be preference share capital. It may be some other instrument. So cost of capital is the right terminology in the with respect to that instrument. Okay, right. What is this? This is with growth or without growth? Without growth. Suppose now next second thing. What is the present value of perpetual cash flows? Yeah, perpetual cash flows with growth, with constant growth. With constant growth. What is the formula? Do you remember? Why am I telling you? Do you think I am testing your knowledge? Why? It's required for me. That's why I am telling you. Tell me now. Here also Y1 cash flows divided by COC minus G. A growth rate you are supposed to reduce it. For this also there is a big logic in behind it. Correct. 100% logic is there. You can prove it. I don't prove now. Okay. The accounts class, not SFM class. Right. But beautiful language, beautiful logic, and beautiful way of proving is there. Yes. First you should remember this. First you make note of it. Make note of it. And you have to repeat it at home. before attending tomorrow class. Whatever we studied, everything revise and come. Otherwise, risky. Triple star, you write there. Key sentences you shouldn't forget. Hmm? Why means you will get to know just in a few minutes only. You'll get to know. Done. Yeah. Now look at this carefully. Now question should come, sir, whether preference share capital is a liability na, whether preference share capital is a equity na? Question mark. Correct na? Is it a liability or is it equity? Adhe question mark always. Liability means financial liability. Obviously, preference share capital means we will pay cash only. We don't give goods. Contract is there. Contractual obligation to pay cash or not. Correct na? So nobody can answer straight away like this. If somebody try to answer no, then you are wrong. First, what you should see? Contract, terms and conditions. Correct na? So obviously the classification is based on what, my dear? It is purely based on the terms and conditions. Agree? Yeah? Yes, without doubt, it is based on terms and conditions. Now look at first question. Sir, is it redeemable or irredeemable? First you tell me that. Next, one more thing. Before going to this, 1 second. Yeah. With respect to preference share capital, you have to see two elements are there in preference share capital. Okay, both you are supposed to see and accordingly answer it. Both means what, sir? One is principal aspect, next is dividend aspect. Yeah, here two aspects are there. Two aspects. Okay, one is principal aspect. Principal. The next one is dividend aspect. Right. Are you liable with respect to dividend? Maybe you must have promised. Principal, I will never pay you. I will pay you. Never I pay means I will not. At the time of liquidation, you should come. When liquidation will happen, God knows. How do I know when do I liquidate? But dividend to pakka I promise you, man. अरे समझ में आया? That means are you liable with respect to dividend or not? Yes. Got it? Right. Now, so the two aspects are there, Amma. You have to, one has to analyze both. One has to analyze both and decide. This is very, very, very crucial. Yeah, it may bounce to some extent, but control yourself. It's 100% easy to get it. Okay, na? Right. So, first, when I say redeemable, irredeemable, is it with respect to principal or is it with respect to interest? Principal or interest, both. I mean, interest in preference dividend, I mean to say. Principal, correct, na? So, first, when I ask you principal, with respect to principal, what two words will come, my dear? Redeemable. Correct, redeemable. Next is what? Irredeemable. Okay, na? Redeemable. Redeemable means what? Repayable. Are you supposed to repay or not? Yes, repayable. The minute you say repayable, is it a liability or not? As per the contract, are you obligated, contractual obligation to settle it by paying cash? Is it a financial liability or not? Yes, it is a financial liability. Suppose if you say irredeemable means what? Payable at the time of liquidation. Irredeemable does not mean you will never pay. No, no, no. It is payable only at the time of, correct now, only at the time of liquidation, only at the time of liquidation or at the discretion of company or at discretion of the company issuer. Correct na? Issuer can buy back. Equity shares also, tell me, equity shares also, company is never liable. At the time of liquidation, I'll give you money. Or I can buy back also in the middle. But that option is with the issuer, not with you. Correct na? That means you cannot come to me at any cost and collar pakad ke mera principal de do. No, get lost. I'm not liable to you. You don't have right. I am not obligated to give. Understood? Right. Irredeemable, when I say, what is it called? Can I say equity or not? Yes, no. But equity is only with respect to principal. Now, hold on. I'll mix both together. Now, when I say, what is the dividend? Are you getting my point? Dividend. That is preference dividend. Yeah, preference dividend. I don't believe in the words cumulative, non-cumulative. These are words I don't want to consider in the contract. Simple words may you answer me. Simple words may. Am I liable to preference dividend? Is it, am I liable to pay every year or not? Is it at my discretion? You read the terms and condition. You understood my point. Preference share capital का terms and condition पढ़ो, prospectus पढ़ो, पढ़ के बोलो. Getting my point? Right. Am I liable to pay or is it my optional? I don't want to go by the word cumulative, non-cumulative word. I don't like it. That is confusing. End of that is simple words चाहिए. Every year am I supposed to pay? Every year I don't need to pay. Or is it my optional क्या? Hello, understood? Right. If you say it is mandatory, क्या बोला ना? It is mandatory. Mandatorily you are supposed payable. Pakka you are supposed to pay. Hello, getting my point? Then what is it? Then it is a financial liability. Right. If you say discretionary, correct na? Discretionary if you say, then it is equity element you have got. Correct? But when you are answering, are you supposed to keep principal plus dividend both together in mind or not? Because I am not selling dividend instrument separate to preference share capital separate instrument. Together only I am selling now. It may be possible, one may be equity, one may be liability. Or it may be, one may be liability, one may be equity. Possible or not? You have to be. Sir, both are there, sir. Both are there means it is called compound instrument. Kya bola? What do I call? Compound instrument. Compound instrument means what? It is a combination of two different types. One is liability, one is equity. Possible to have both. Kya bola? Possible to have both. Very much possible. Correct na? What all options will come? Tell me now. What all choices can come? With respect to principal, with respect to preference dividend. One can be equity, another can be equity. Then question are there. Together is equal to equity. Situation number one. Correct? Situation number two, what? This is also financial liability. This is also financial liability. This is financial liability. There is no compound. Right? Correct. Now the problem will come with third and fourth only. Na? What is third and fourth? One can be equity, one can be liability. Or one can be liability, one may be equity. These instruments are called which instrument? Compound financial instrument. Sir, compound है तो क्या करना? Cut करके लिखना. Okay. Means what? 10 lakh rupees you got. Out of 10 lakh rupees, how much liability? That you keep it under liability. One instrument A. But recording time, correct now, one instrument A in the balance sheet will decide preference share capital, what, how much is equity portion? 10 lakh rupees mein 4 lakh is equity portion. How do you bifurcate? I will tell you. A measurement I will explain it to you. Okay, now that you don't worry much. Yeah, preference share capital liability portion will be 6 lakh. Cash what you have received is equal to 10 lakh. When some instrument is a combination of two elements, that is liability and equity, we don't write it in the middle or somewhere karke adjustment. No. Here only we have three elements: asset, liability, equity. If it has a combination of liability and equity, cut it and write it. How to cut? What is the basis for measurement? So much is there that I can't teach you just now itself. Have you understood first basic thing? Yeah, what is that you understood from preference share capital? Tell me. Preference share capital, whenever you want to analyze, you have to analyze it in two angles. What are the angle? Principal angle, dividend angle. Correct now. Principle. See, read the question, read the terms and conditions of the agreement carefully. Is it redeemable or irredeemable? Understood? Redeemable, financial liability. Irredeemable, equity. Okay, next, with respect to preference dividend, is it an obligation for me to pay every year or is it discretionary? Discretionary sense, whenever I wanted to give it to equity shares, I will give you first preference will come to you. But if I don't want to pay to equity shareholders, then I will not pay you. Is it my choice or your choice? My choice. My choice means discretionary to the company, issuer. Then we'll decide, then that is equity kind. But when you are analyzing entire preference share capital, you have to see both and analyze it. Yeah, if both are equity, no discussion, equity. Both are financial liability, no discussion. Together, instrument is equal to financial liability. But sometimes it can happen, one is liability, one is equity, one is equity, one is liability. Such a kind of instrument, we call it as a compound because it is not one type, it is a mixture of two types. Getting my point? It is a mixture of two types. So there you should be very careful. You are supposed to bifurcate it. Liability portion under liability only you should present it. Equity portion should be under equity. Together instrument 10 lakh rupees will not come one side. Cash will come 10 lakh, but it will be in the two lines like this I have showed. Have you understood? Right. So now let's get into the some questions. You have to write now this part. This small, this you wrote now already. Yeah, just take down this part. We'll go to some question and answers. We'll try to some extent. Sometimes in the questions, they will tell cumulative word they'll use, but below they will tell at the discretion karke they will use. So end of the day, don't go by the cumulative, non-cumulative word. End of the day, term is what? Am I liable to pay, not liable to pay? That is crucial. Okay, our word cumulative, non-cumulative is actually confusing. That's why I don't want, I know the meaning of it, but I don't want to consider it to reduce the confusion. That's all. Shall we? Right. Look at few questions. What are there? These are just for classification. I'll take 10 minutes. Okay. Maximum. We'll finish it off. One level at least. Because you learned just now. Yeah. Concept capsule 2. One is easy. That's you can do it on your own. A Limited makes a purchase of steel for the consumption of a normal course of business. Steel you are buying. Buy no problem. The purchase terms provide the payment of goods at 30 days credit period, interest payable 12% if there is a delay. Analyze the nature of financial instrument. Tell me, for A Limited, A buys. A buys, if you buy, what will happen? Creditor, correct. Na? Even if you suppose you cross the time, what will happen? Interest payable, you will record it. Interest also, how do you pay? Cash or something else? Cash only. So is it a financial liability or not? That's all. It is a financial liability. No great point. Next, 3. A Limited makes a borrowing of 10 lakh rupees from RBC Bank. Okay. With a bullet repayment. What is bullet? Interest will pay over the period. Principal in one shot. That is called bullet. Okay. What is bullet, amma? Principal in one shot. One shot. That is toward the end. Interest will pay over the time. Interest every year or something like that. Every year or monthly, no, whatever. As per the terms. Fine. So 10 lakh rupees and annual interest of 12%, that's okay. Annual interest, fine. Now the company defaults at the end of the 5th year. At the end of the 5th year, defaulted. Consequently, rescheduling the payment schedule is made beginning of the 6th year onwards. Okay, reschedule kar diya. The company is required to pay INR of 13 lakh rupees at the end of the 6th year for one-time settlement. 13 lakh rupees pay karo and close karo. Something like that. Agree? Sorry. In lieu of the default in payments made earlier. Does this above restructured instrument, is it a financial liability or not? Analyze the differential amount to be exchanged for one-time settlement. That's okay. See, what is your principal must be lying? Same 10 lakh only, na? Because you are clearing all the time. Interest or not? Hello, correct? Interest is not paid only for the last year. Default kya means what? 5th year you have not paid the interest. How much is interest element? 10 lakh into 12% principal, that is equal to 1.2 lakh. No. Actually speaking, how much you should pay in 5th year? 11.2 you should pay. How 11.2? 10 lakh rupees of principal plus 1.2 lakhs rupees of interest. Agree or not? But for that, what are you doing? You are exchanging with another loan. This is a financial liability. You are getting another loan. What is the new loan? 13 lakh I will pay you at the end of the 6th year. Means after 1 year only, na? Hello? Correct. If you bring that also to present value by applying the 12%, right, it must be more than the 11.2 lakh rupees pakka. Yeah, exchange mein, is it favorable or unfavorable? See, it is like this. Old loan is gone, new loan has come. Old financial liability, I exchanged with the new financial liability. Now, when you have to exchange it, then is it a potentially favorable to the entity or unfavorable to the entity? Unfavorable. Correct. Unfavorable, unfavorable. Pakka unfavorable. Our difference amount is unfavorable to me. Then still, is it a financial liability or not? Obviously, it will fall under that exchange concept. It will fall. Just look at the point, basic point. Loan amount is equal to amount wise. Let's see. What will be the cash payable as per the understanding? 13 lakh rupees. Okay. Fine. Loan principal amount is equal to 10 lakh. Amount otherwise payable at the end of the 6th year. Amount otherwise payable at the end of the 6th. Okay, fine. I have brought it to present value. They are taking it to future value. It's okay, not a problem. 4th year you already paid interest. Correct? 5th year have you paid interest? No. Suppose 6th year mein if you pay, how much amount will you pay? Calculator hai kya? Use it. 5th year you are supposed to pay actually 11.2, correct? 11.2 on that one, again 12% you should pay, na? Now apply, na? 11,20,000 into 12% plus 12%. How much will it come? 12,54,000 is the number, na? We took it to future value. But as per the new agreement, isn't it 13 lakh is payable? That is also future on, both are Y6 numbers only, na? Right. So isn't it favorable or unfavorable to you in future value terms? Obviously unfavorable. The difference is unfavorable to you. 45,000 600 rupees. Yes, it is a financial liability. I am giving my loan worth of 12 lakh 54,000 and odd, but I am getting a loan of 13 lakh rupees. Unfavorable to me. This is loss has happened because of the rescheduling, restructuring of loan. One more word will say. When you are not able to pay, you can go to banker and ask him, request him to change it. I can't pay, but he will not do free of cost. He will charge you something. Charge 45,000 rupees. Penalty, it is a kind of penalty because you are asking, you are postponing, you are not as per the terms and conditions. Otherwise, he will go to NCLT, some other government, correct now. He will take everything out. That's going to be dangerous to you and your company. Understood? Right. It is a financial liability. That's it. Right. Only one last one, concept capsule 4. Dekho. Settlement in variable number of shares. You see, Target Limited took a loan from Jet Limited for 10 lakh. Jet Limited enters into an arrangement with Target Limited for settlement of a loan against issue of certain number of equity shares of Target only. Means Target has to issue its own shares or not? It has to settle it by its own shares. Yeah, whose value equal to 10 lakh rupees? Means how many shares we will issue? 10 lakh worth shares I will give, but I am not telling how many number of shares. That means amount is, consideration is fixed. Correct. For this purpose, fair value of the share, that is total number of equity shares to be issued, determined based on the market price of the target at a future date. Correct. At a future date, what is the fair value will fix. How many number of shares will issue means what? 10 lakh divided by X. X is nothing but fair market value on the date of settlement. Now tell me, is it a financial liability na, or is it a equity na? Financial liability. Why? Yeah, wherein you have to issue variable number of shares. One is fixed, another one is variable. Only when is it equity? Fixed. Consideration also fixed, number of shares also fixed, then it is equity. Other than that, any option is a financial liability. Correct? That's all. It is a financial liability for the target company. Have you understood? Right. Do one thing. Whatever we have learnt, asset, liability, equity, financial liability. Correct? Na? This go not one time, 2-3 times you properly revise and come. Then only we can go through this. All these questions are given. This is all explained by preference dividend, cumulative, non-cumulative. Explanation is done. Okay. Right. We will directly attack the question and answers. Right. If you have that Ind AS, you can use this reading that book, textbook, you read it, spend some time and attend the next class, then it will be fine. Right. See you in the next class.